Hello everyone, this is Rahul Jakaria from Sharekhan. Welcome back to exciting 3R actionable stock updates. 3R basically means right sector, right quality and right valuation. These are our investment ideas.
Today we have an update on Gabriel India. Our analyst maintains a buy rating with a revised price target of Rs 481 on Gabriel India owing to its strong brand equity, market share expansion strategy, focus on profitability, the expectation of a rise in content per vehicle, inorganic growth strategies and renewed focus on exports. The company has been sustaining improved margin trajectory. Sunroof project has been on track and delivered positive EBITDA in Q4 of FY24. Next, we have an update on Affle India. Our analyst maintains buy on Affle with a price target of Rs 1535 as the company is expected to accelerate the growth trajectory driven by a wider adoption of its CPCU model, increased digital spending by advertisers, broad-based bounce back across verticals in India, and increased traction in developed markets from its integrated approach. Affle reported a good quarter despite the weak seasonality, surpassing the cyclical trend by growing sequentially, driven by strategic initiatives and strong business momentum. The company's strong FY24 exit indicates its resilience and signals the continuity of high growth momentum in FY25. Further, higher realization of synergies from the full integration of UAP to aid in expanding scale and drive premium conversion to advertisers. We expect a sales and PAT CAGR of 25% and 16.4% respectively over FY24 to FY26. At current market price, the stock trades at 43 times its FY25 and 36.1 times its FY26 estimated EPS.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.